Hey everybody, welcome to another episode of PitchUs. We are excited to be joined by Jason Burke. We've got Jeff Erickson with us, and then we've got our entrepreneur Vince, who will be sharing his company with us. One of the things we really want to do here is help you guys pitch better. So please stay to the end and then see where he can make some adjustments. So Jeff,
Yeah,
please introduce
thanks,
yourself.
Tim. Always love being on the PitchUs podcast here and excited to hear Vince's presentation. Also excited to have Jason join us. My name is Jeff Erickson. I am with a company called Forecaster. Forecaster makes financial modeling simple and easy for early stage startup founders. If you need help with your financial modeling, that's kind of our expertise. With that, Jason, I'm going to have you introduce yourself, and then we'll have Vince pitch to us.
All right. Well, thanks for having me, guys. I'm dialing in from Boston. My name is Jason Burke, and we're all here on Valentine's Eve, no less. I don't think we expected that to happen. But I'm the founder of Allstage. We're an invest tech platform business building product for founders and investors to introduce an element of community into the early stage fundraising and investing process. And as both a founder and personally as an investor, I think about a lot of this stuff all of the time. So I'm looking forward to hearing what Vince has to pitch to me.
All right, Vince, please share your screen and pitch us.
Cool. Thank you, guys. Appreciate the opportunity to be here and go through this process. Again, I'm Vince Romney. I am a cybersecurity practitioner. I've been involved in both military and civilian capacities. I have about 23 years of military service. The last 6 and change of that were full-time cyber warfare. Here to talk today about the NICE three-factor authentication model. The NICE three-factor authentication model is built around the idea that identity and authentication are literally the linchpins to everything that goes on in cyber attacks. This is the core principle of our product. The ask today is we're seeking a $1.5 million investment, and that will be going towards the initial production run so that we can get into beta installations and start the sales cycle officially. We're currently owned by 3 partners, equally distributed. Again, it's a $1.5 million investment. We're offering a 40% stake in the company, and our current cap table is a $3.75 million valuation. So again, the use of funds, we have a prototype. We actually have 2 prototypes developed and baked. We've done proof of concept using those, and now it's to move into that production cycle where we can get several hundred of these keys. So we have to refactor the firmware a bit, do a UX development. So there's actually a good user experience for that process of setting it up and using it. Now, with the production side, we are going to have to do some refactoring, build the new bomb and the Gerber, and then do our tooling. Then once those production cycles have taken place and we actually have 100 or so units initially, we'll get out, do our beta installs with some friendly partners that we have. These partners are people we've talked to about the product, and we'll discuss those in a bit, but they're there to help us get a initial installation and use case scenario set up so that we can move forward with any tweaks that have to be done before we go full production. From a standpoint of the need, there's no confusion out there. Everyone knows that cybercrime is a problem. There's huge numbers associated with it. But really getting down to the key of this, credentials are what cyber attacks need. If I'm attacking somebody somewhere along that attack chain, I need credentials. Once I get those credentials, then the whole process is much simpler, and I'm able to go forward with whatever compromise I've set forth. There's a lot of attempts to break that cycle through 2-factor authentication. We've seen in recent breaches that 2-factor authentication still has the ability to be breached, not as simply as a stolen set of password and username, but it still has that capacity to be broken. And so a hardened 3-factor authentication model is what we've developed to address that issue. The solution against true 3-factor, it's something you have, the hardware key that we've developed, something you are, the fingerprint that's registered in the system, and then something you know, a passphrase, just like a password. We've designed this because of my background in the military. to be very simple for both the administrator and the user. That was one of the challenges in military high-side authentication. It's always very complex and difficult, especially when moving from environment to environment to different bases, etc. This is just a simple, small USB 3.0 device and a gateway server that sits in front of all of the other assets. So it's a IAM, identification and access management server. And implementing this process and system inside any given environment really takes it down to the point where privileged access or access that would cause compromise to a company is effectively eliminated. The business model is a recurring revenue model. We see it as a basically $20 retail. It's a $9 COGS going in. That includes the keys and the gateway, updates and maintenance. And this really replaces several other things. Because we have a hardware VPN as integral to this system, the companies are able to eliminate VPN, utilize this exclusively, and then also their IAM package, whatever it is they're currently using, also gets replaced. We have some friendly partners, as I mentioned, a couple of companies locally that are ready to jump on board with us as a beta partner and development partner for the initial process. And then we've added some value-added resellers and other partners for our sales funnel once we have the product ready to go as tech over Nexus IT encoded. So from the financial standpoint, this is our projection for our 4-year forecast. And based on just the inroads that we have today with our service attainable market, we see about a $20 million profit after 4 years. That's with no future sales channel development. It's just our basic run. As far as the market size itself, the TAM is obviously very large, but the service addressable market is about $1.3 billion. And we see that if we were to expand our sales channels and really take an aggressive stance on this, we project that somewhere about 3 to 5% of that SAM would be available to us. Obviously, it's a very competitive market. IAM in particular has a lot of players in the industry. One of the things that we make sure that we differentiate in is that first off, we're true 3-factor. It would be virtually impossible for somebody to get all 3 of those factors compromised simultaneously. And we also integrate a hardware VPN. Again, that's a part of this package that is not a value add, but it's essential to ensuring that the communication between the key and the gateway server is uncompromisable. And then traction, what we've done in the past up to this point. Again, we built our prototypes. We've got the initial BOM and Gerber files generated. Those will be tweaked. And then we've done wireframe for the UX. Initial sales conversations with several DoD components. These are vendors, DoD contractors that are interested in the process, banking and finance, entertainment, and some institutional partners as well have expressed interest in participating. Our milestones that we expect to hit are really the funding event plus 30 days going into that refactor. From then, you can see kind of our primary goals through this. From a roadmap perspective, year 1 is that establishing of our initial market, getting some penetration in there with our beta groups and the value-added resellers. Year 2 is taking what we get there, pivoting some of that money into a cloud-served version. We recognize that we're focusing initially on kind of that DoD, fintech, high security environment where there is an on-prem server. There's a gateway. Moving that to a cloud model will be something we do in year 2, and then integration with other data security tooling following in the coming years. Our partners in the group have a lot of experience and mature people, been in startups, in tech, in other environments, banking and finance, and we feel like we bring a really broad spectrum of experience to the game. Again, the opportunity, it is a novel solution. This is not something that's out there currently. There are a lot of people interested in hardware tokens, authentication tokens. We have just taken a perspective that we believe is novel. We haven't found anybody doing this approach in the market at this point. We have had really good interest as we've talked to people in various capacities. They've shown a lot of interest in the idea. And again, cybercrime is only showing increased activity. I don't think that's going away anytime soon, unfortunately. The exit, we anticipate an acquisition. That tends to be the model that we see in the market right now for most technology companies in security. build up to a certain point, and they get acquired. So again, in summary, we have a tooling setup and a system that is built towards the core piece of any compromise that exists in today's world. When a compromise occurs, that's where we're going to be the most effective. We're again asking 1.5 million, and that's the basis of it. We're just looking for the right financial partner to join us. Happy to answer any questions.
Awesome. Thank you so much. And I have a ton of questions, but let's start with areas that we liked. Jason, why don't you lead us off?
Yeah, so Vince, I think you're absolutely attacking a massive problem. Cybercrime has been big in the last decade, and I think we're going to see hockey stick growth on the number of incidents, and these incidents will get bigger, especially with the growth of AI, where computers are starting to do perform some of these crimes. The computer is the software is the criminal, so this is a big space to hit. I like the background of the team, and I'm going to weave in a suggestion here. Would be helpful to perhaps, given the strength of the team, push that up towards the front. That was sort of left as oh, by the way, this is what the team looks like. So a little suggestion there, sort of take advantage of telling the story around the opportunity, as well as highlight the strength of the team.
Great.
Cool.
Yeah,
Thank you.
Vince,
Jeff?
great job. I'll tell you a couple of things that I really liked. One, you present really well. You come across confidently and you know your stuff. I came out of here thinking you're very knowledgeable about this space, and it was really easy to listen to your presentation. Great job there. I actually liked the way you started out with a summary of this was what we're going to go through, and kind of set the stage there. I think we might have gone a little bit too deep into the summary on the second and third slide, but we can kind of go through that. And then, I like also how you ended up with a summary slide, and you left it up here for us to refer back to, where it's got the ask and how you're going to use your funds and all of that. So it gives us a good reminder and some talking points there as we dive into Q&A. I think there's some things that we can comment on, and one of those is there's a lot of text on this slide and a lot of the others. And so I did find myself reading quite a bit throughout the presentation, trying to catch up. But anyways, we can get into some of that in some of the feedback.
Okay.
But great job overall.
Yeah, I can't
Thank
echo any more than what everyone else has said. You starting it off with a summary about you is very critical. I was actually really interested to see what your solution was, because your background was so strong. And then, like Jeff and everybody said, just a great job overall. But I think we can add a ton of value and make this thing a little bit better. And so, with that, Jason, what's some areas of improvement?
Yeah. Most investors that you talk to aren't going to be as intimate with the problem statement as you are, Vince, and as your team. So you want to really dumb it down. Sometimes it's hard to do because you feel like you're leaving a lot of detail that is, in your mind valuable. But investors, especially if it's the first time you're pitching them, they're not ready to go deep, and they're not fluent in the actual problem space. So you want to really make it clear to them. The use of funds, I think it's helpful to understand sort of the ways in which you're going to use the money you'll raise, what you're going to spend it on, and sort of that breakdown. Investors also want to know, what is the business benefit of this? So yes, you want to talk about, we're going to be hiring the team. We're going to be hiring certain folks on the team. We're going to be rebuilding the interface. And that's in preparation to be able to expand to a different market, or to close our first 10 customers before, by the end of year one, just as an example. So if you can sort of marry those two, both sort of what you're going to use the funds for, and then what is the business benefit from executing on the use of those funds, that'll be really helpful. And I think the VCs, and I think you'll get different feedback from different investors around this one, as far as whether you should talk about what the exit might be. You mentioned this towards the end around potential acquisition. I think everyone always has that in the back of their mind. From an investor point of view, there could be an IPO, could be an acquisition, but VCs also are looking for that very big exit, and they don't want the founders thinking about that exit just yet. They want founders thinking about just execute on the business. We want to build revenue. We want to create market share. So you might want to keep that out of the deck, but be ready to speak about it if asked by investors.
Okay. Yeah, cool.
Yeah, I would say that's one of the bigger feedbacks. Generally, some people love it, some people don't. And it kind of, that's a 50-50 slide. And I think to Jason's point, if you don't like it from a story point of view, then just throw it in an appendix. I think it's always beneficial to pull that up in case someone asks. But that's that. Any other feedback, Jason?
I think the only other one is a little bit tied to the use of funds, because it could play out on that particular slide, but there's a few others where it could also be used, and it ties to what Jeff was mentioning around too many words. You can replace a lot of these words or a lot of the numbers with visuals. Again, what you don't want is for the investor to stop listening to you and your great story and trying to be buzzing through 100 words on a slide in hopes to finish that before you move to the next slide. So that can be done a lot with visuals, which is also easier to digest as well. So I think that's those sort of things. There's a handful of sort of actionable takeaways as far as sort of how the overall presentation and deck can be tightened up to that will gain a lot of mileage for you.
Agreed.
Yeah,
Jeff,
I'm going to echo a lot of things that Jason mentioned, starting with the problem statement. One of the things that threw me off a little bit was, like I said, I loved that you did the summary and you kind of set the stage saying, okay, this is how much we need. Here's kind of how it's going to be used. Here's, here's kind of the setup. Here's who the team members are. And then we jump into it, but then you kind of went a little bit deeper in there and said, okay, and here's kind of all the details around what we're going to need and why we need $1.5 million, what the valuation is and all that stuff. That's stuff that I would leave more to focus on towards the end. One, because I don't even know what the problem is or the market or any of this stuff yet. So we're too early to start talking about that. But I'm okay with the summary to say, okay, this is where we're going. I just leave some of that to talk to towards the end. Along those same lines, we really didn't get into the problem statement until several slides in. And even at that, I think we were talking about the solution and what this looks like before we have an idea of what the problem is. And so I felt like I was kind of playing catch up. And by the end, I mean, I kind of inferred at some point that the problem is, two-factor authentication is not secure enough. But I think it would have been helpful for me to understand that a little bit clearer up front, and to maybe have something in there that says, this is why two-factor authentication doesn't work. Because, I'm not sure why the cybersecurity, all the things are happening. Is it because people haven't simply turned on two-factor authentication, or is it that it really is easy to get through? And so if you can give me some examples of that and show me what the problem is, and then it's going to make it a lot easier for you to dive into the solution. And that's where Jason was mentioning that talk to me like I'm a fifth grader or whatever, when you start to dive into that, that solution about, here's how we're going to solve the issue. So those were some things I thought might be helpful in the solution and problem area. The other thing I'll mention is when you started to talk through, well, when you went through your milestones, there were a number of slides, kind of like this one we've got on the screen still, where it's all text. And I think if you can use some graphics or something to break that up and get the same message across with fewer words, milestones are good for that. Where I think you had just all your milestones kind of listed in a text string. If you kind of put a graphic to that and say, here's what we've accomplished to date, and here's kind of the pathway along the timeline, and here's what we're going to accomplish going forward. That's an easy way for me to follow it as you're talking to it, without having to try and read through every line item and hope that I'm not going to miss it if you move on to the next slide. So feedback there.
Cool.
I
Yeah,
did
that's
want
excellent.
to
I like
also
that.
mention something that Jason hit on the exit slide. Again, this probably goes more to understanding your audience, because like Jason said, if you're talking to a venture capital firm or an institutional investor who is looking for this huge, opportunity, cybersecurity has a huge opportunity. You could be a billion-dollar company. The TAM and everything, I mean, is enormous. And so a lot of investors might come into this thinking, okay, this could be our, this has the potential to return our fund, or to be a 100x return for us, right? Well,
Mhm.
that's something that you're going to disappoint them if you come in and say, yeah, 3 years from now we expect to be acquired. Most venture capital firms, that's not going to be super exciting to them. They want to hear you talking about how this is going to be a $30 billion company in 7 years, right? Because that's where they're going to see, okay, this has a potential to return our fund or that.
Right.
Now, on the flip side, if you're talking to
Yeah.
angel investors or a family office or somebody that is thinking, hey, if I can, triple, quadruple my money in 2 or 3 years, this is a great deal. I'm interested. How much more money do you need to raise, and how am I going to get diluted over that period of time? An exit to me in 3 years might be really appealing. So again, it goes back to know your audience and who you're talking to. And I kind of like Tim's suggestion and Jason's to maybe leave that out and put it as an appendix so that you can refer back to it and one good way to do
Okay.
that I've seen done really well is to maybe just show examples of other companies in the space and say, this is a hot industry. For example, XYZ company was acquired recently by this company for $2 billion. This company was acquired by them and this. And then it just kind of says, that there's a hot market here, a lot of demand. There's a good possibility you might get acquired without you having to really say it.
Cool. Yeah, that's great.
Yeah, Jeff's
Awesome, cool.
point is
So
great around using historical fact around company X was building something similar and
Right.
exited for a certain amount of money, and sometimes that's often stronger than painting a picture about what the future could be. Obviously, that's what we're all about as entrepreneurs,
Right.
thinking about the future. But the a lot of investors are want fact, and being able to point to something that has happened in the past is often a strong tactic.
yeah, totally agree. Some other areas. One, these are just little things. You can use the whole slide. I think like there's lots of border around this slide. You can expand on this. With that, your font is pretty small. I bet it's probably about 18. If I were to guess, I'm not a visual person, but if 22 we think is pretty much the minimum font size on a deck, it'll also help you cut out words because you just don't have that much space. So try those things out.
That.
Um, the financial slide, it condensed my screen here was really hard to read. It was so small that even zooming in, I just couldn't even read what was on there. So think about that in the same
Okay.
vein. There's 22 size font. Um, Jeff and Jason both mentioned your problem statement. I think you did a decent job about the what. I think you need to add the who into the problem statement. Who is having these security breaches that need three-factor authentication, right? You didn't mention until, like Jeff said, probably 3/4 of the way through that you are thinking about going after fintech and DoD. And that would have made a ton of sense based off of 30 years and with military connections. And so if you would have said, look, the Air Force has this problem, and I have a question kind of about that, right? Like my brother's in the Air Force and they have to put their card in the machine. Like what's different between that and I've seen those like third party thumb things. So I would have liked to have seen a better uh, comparison to
Yep.
some of those types of systems. But I think that who was definitely missing in the initial problem statement.
So
Yep.
in that context, Tim, I mean, one of the things that I contemplated digging into, which I didn't in the presentation, is that when I was going from, we call it low side to high side. So low side is the NIPRNet. It's your
Yep.
basic internet in the Air Force and the military. Then you have SIPRNet, which is kind of that mid-tier secure environment. Your
Yep.
secret stuff is in there. And then JWIX is your high side. That's where you're dealing with top secret, segmented,
Yep.
compartmentalized information. And the SEI environment is, so your CAT
Yep.
card gets you onto NIPRNet. Your CAT card and a key code generator get you onto SIPRNet. And then your CAT card, your key code generator, and depending on where you are in JWIX,
Yep.
a fingerprint reader. And they're all three separate
Right.
devices, essentially, right? And so that's, I think that's where my experience came, that it was really hard to navigate that, especially when you moved your credential set over to a
Right.
deployed
So
location, because
So
all of that had to be
I'm asking this
reconstructed.
question, are you replacing all of those with one thing? So that would have been a better
Yep.
problem statement than what you did, right? Because that is a
Okay.
real issue, right?
Oh, cool.
You don't need to have three different
Yeah.
things. It costs this much money. You can keep the same thing between, right? Like those are all the problem statements
Yeah.
with just that system. And it would have been much cleaner, right?
Okay.
And then you
Cool.
would have said track.
Not going to down that
So then the
level.
question becomes, then if that's who you're targeting, how does Unique and how does Nexus IT, these are people we know, but how do those fit in with that DoD model? It seems like you kind of have like it's branching real early on who the customer is.
Yeah. Certainly, the concept of branching is a legitimate one, and that's why I talk about the cloud version being year two, this being a single kind of on-prem type of environment. In the case of, say, L3
Yeah.
Communications, they're an early part. They're interested in being part of this initial beta project, and so our product moving into the market would be phased into those environments first, environments that have an on-prem situation. Robbie Jackson over at Unique is willing to work with us to start developing that cloud.
Okay.
Because they're a cloud first
So
company.
what I would do, suggestion, is to make this only about phase one. You can talk about the future eventually, but I want to know who that customer is. And then I want your financials to be based off of who that customer is. So you said $20 per month.
Okay.
Is that like $20 per user per month? I mean,
Yep.
for the Air Force, that seems real expensive. I have nothing to compare it to, but
Oh, yeah, no, it's actually pretty
so
cheap.
that would be good to know as well. Like in that comparison, you could say, look, they've got these things and it's $50 per month per user. So
Okay,
I think that,
cool.
again, that who in the problem statement would have added a ton of value to the rest. Then you could have built your financials off of that same who, and the rest of this would have made a lot more sense. Font size. Yeah. That's really all the feedback that I have. I like this space. So I'm really interested in the answers to this next question. And that is based off of what you heard today. And this is what happens when you go and pitch angels. Usually they've never met you before. Based off of what you heard today,
Right.
Jason, would you move this company into due diligence?
I would. I would. I think the opportunity is very, very big. Obviously, Vince, we had various feedback around the material itself. I think some of the stuff with the deck. I think what we saw today was more of a deck that would be a leave behind. A leave behind. Someone can sit down, at their desk and read this and really digest this. Whereas a
Okay.
presentation, should be more visual, far less words, and you're really telling a story. But these are really solvable problems, sort of reordering things and changing the presentation. But yeah, there's a big opportunity here, and I had some questions around the valuation. What type of instrument are you using? I wasn't clear on sort of valuation, because as if there was a valuation set, or maybe you were referring to a valuation cap that would be on a safe or a convertible note. But regardless, that number of, I think you had a 3.75 million is,
Right. Yeah.
I don't know how that fits within, the security realm. But that's a all things aside, that is sounds like a very fair number at this stage, given the traction, given how new the company is. So I think, with a handful of changes, you can really tighten this up and improve it.
Yeah,
Yeah.
I'm gonna.
Jeff?
There's a couple things that stood out to me, and the first one was when you got through to the valuation. You actually presented the valuation up front. That threw me off a little bit, because it was 3.75 million valuation, but you're looking for 1.5 million,
Okay.
and you're saying you're giving away 40% of the company. And I'm looking at, you've got 3 owners that each own a third of the company. That was a concern to me, that, okay, you're giving up 40% of the company here in an early stage round. How does this play out for you guys as a founding team? I got the impression from some of this and by some of the presentation that there wasn't a lot of experience on the fundraising or going through this side. I think I would have felt a lot more confident
Yep.
if you had like somebody on your team that had done this before, in terms of building a company, taking it through the venture capital process or angel investment process, and having an exit. That was a piece I was missing. I feel like the rest of your team, I got the impression that you're all brilliant and you know this space and all that. That was a missing ingredient. Was it, has somebody done this? Because to offer up 40% of your company, I immediately thought, man, have these guys actually modeled this out and figured out, does that actually work? And so I think there's a little lack of experience there. And for that reason, I'd probably not take it on to due diligence. At the same time, I think, it's a huge opportunity. I would also, the other thing I'd point to is the traction, that it's really, we're in these sales discussions. We've got a couple willing to beta test it. I would probably wait till we got into that. And then I'd probably advise you to get through some of that before you raised $1.5 million and gave away 40% of the company.
Yeah, so I kind of split on this one actually. I would love to learn more. This is something like Jeff just mentioned. I have a lot of more questions than I have answers, but I'm interested enough to say, like, let's have that discussion. Um, I think to solve what Jeff just mentioned, I think advisors could be those people that help say, look,
Myth.
yeah, this is maybe our first venture. I don't know if that's true. You didn't tell us. But we brought these people on who have sold to government before, who know how to get these things in. And therefore, like, we're good to go. They're on board. They put 100K into the business as well. So those kinds of advisors would add a ton of value. But my answer is yes, because I'm interested in the space. I want to find out more about the product. But I think if you cleaned up some stuff, it would either highlight some areas of opportunity, or it would really solidify that due diligence is the right way to go.
Okay. Excellent. Excellent.
So with that, we'll close. Thank you guys for being here. My name's Tim. Please check out the pitch deck book if you guys are looking for how to present your business. And then check out Forecaster if you need help with your financials. And we'll see you all next time.